What's up, everyone? It's Karthik with MoneyVest. So maybe there is hope after all. PayPal stock is what we're going to discuss in today's video. It is pushing higher, up a little bit over 3% to trade up to as much as $71 a share. Honestly, this actually feels like a dream. Somebody please wake me up from this dream. A level, a price for PayPal that we haven't seen in over exactly a year. So last time PayPal was trading as much as $72, $73 a share was quite literally back in August of 2023. So after an entire 1 year of consolidation and trading below $70, PayPal is finally breaking out above $71. And again, I don't want to get ahead of myself. Markets are still well open, and we still have 6 hours left for close. So anything is possible. You know, if anything, I can wake up from this dream and PayPal can be at around $60. But yes, this is actually quite interesting to finally witness PayPal trading well over $71 with a nice little breakout. Now, I did a video 1 month ago, as you know, that, we've been talking about PayPal for well over 2 years. It's been a stock that I was dollar cost averaging into, but little did I know this was going to be one of my worst stock picks. I did a video 1 month ago talking about my worst stock pick ever, my biggest loss, and was down almost 50% on this position, barely, just under 50%. A little bit under $24,000. So make sure that you do go back and check out this video as well. But really just keeping things transparent and letting you guys know that I'm also human. I'm not going to get everything right. In fact, if anything, my win rate or my success rate is about 65 to 70%, as what I've noticed in the past, is if I'm selecting 10 stocks, 7, at best 8 stocks are going to be the ones that actually play out really well. A few bad apples are going to be there, like PayPal, Walgreens, Neo. Few companies are going to not play out as what we expected them to. But that being said, PayPal was one of them. And, other positions have been relatively small, but PayPal, I did have close to 400 shares. I still do to this day. It's still part of my portfolio, but of course, the loss has diminished to now close to under 40%. So I'm still holding on to it. Pretty big unrealized loss, but maybe there is potential for Alex Chris to turn things around after all, and for us to see it back over $80, $90 a share, which is what we're going to go over in this video. So hope you'll enjoy this video and appreciate the transparency. And again, share this video with other traders, other PayPal investors, as we like to call it, Pain Pal, because all it has given us is a lot of pain in our portfolio. So make sure that you share this with other investors, traders in your communities, Discord channels, WhatsApp groups, Facebook, whatever. I would really appreciate that. It helps the channel grow and gain more engagement. Now, one of the reasons why we are seeing quite an significant increase in PayPal stock here, we got a couple upgrades. So this right here are a few upgrades for the stock. So new street adjusting price target on PayPal to $85 from $80, maintaining a buy rating. And JP Morgan also adjusting the price target on PayPal to $80. That's up from $77, maintaining an overweight rating. So we got a buy rating, overweight rating with a couple price upgrades on the stock. And PayPal here also coming out with a potential partnership with a global fintech company. So on Tuesday said that it's expanding its strategic partnership with a global financial technology firm, Edian, so to increase the research of Fastlane by PayPal. So details were not disclosed, but Fastlane by PayPal is a new guest checkout experience that helps shoppers convert about 80% of the time while reducing checkout time by 32% compared to traditional guest checkout. And this company will be offering Fastlane by PayPal to accelerate guest checkout flow for its enterprise and marketplace customers in the US, with the aim of improving consumer shopping experiences and enhancing conversions for the businesses leveraging Edian's platform as well. So that is one of the reasons why we may be seeing a very, very significant momentum higher in the last couple weeks here. Since Monday, August 5th, the stock is now up well over 23%, which has been a very nice recovery back up to those levels. But we were kind of skeptical whether PayPal is going to be able to break out above this resistance or not. But we have very successfully not only broken out, but we are now starting to make a new higher high. And there's a lot of momentum also coming in. So there's a lot of volume that's also been participating on the back of this breakout for PayPal. So last average 30-day volume, we're seeing over 12.5 million, and already on the day, we're over 6.3 million shares that are traded for PayPal. So let me know your thoughts down in the comment section below for this company. We are coming up to overbought levels. Never thought I'd see overbought levels for PayPal again, but here we are with a 72 RSI, a level that we haven't quite seen since July 2023, so well over a year. And the next target, a very, very important level that we need to watch, is going to be $76, $77 per share for PayPal. Now, coming over to our MoneyVest platform, so if we go over to our own website, our own MoneyVest platform, if I type in PayPal, we have done several analysis on this company. So if you come over to the MoneyVest metrics, going back as far as the last 7 years, you'll notice that the company has done a really good job in growing the top line, profitability, cash flows, everything across the board. So if I plot for revenues, just take a look at that consistency. I mean, they've gone from about 13 billion to well over 29, almost $30 billion. If you plot for gross profit, operating income, net income, operating cash flow, free cash flow, whatever it is that you want to plot, you can do that on our platform. And this is just picture perfect. This is absolutely beautiful. Remove for revenue, gross profit have stabilized a little bit in the last 2 to 3 years. But they have increased from about 6.3 billion to now sitting well over $11.7 billion. This right here is going to be, again, operating income, net income, operating cash flow, free cash flow. Everything's been moving in the right direction. However, the last few years, yes, you can make a case that it's been more or less stable, as net income has gone from about 4.1 billion to 4.2, so it's been more or less flat. And free cash flows have also been relatively flat from 5.3 billion to about 4.3 billion dollars. However, PayPal in their most recent earnings calls also did increase their guidance for fiscal year 2024. So that is a plus point, as they do expect acceleration for active accounts, which they did grow finally after a big shift in the overall business focus here. We saw the active accounts growing. We saw engagement that continued to accelerate higher. And of course, they also guided for higher revenues and cash flows and earnings per share for the business as well. Coming over to some of the margins. So that's, been one of the reasons why PayPal has been under a lot of fire because of the compression of overall margins. I mean, gross profit margins have come down from 48% down to close to 40% now, under 40%. And they've also seen operating margins also more or less stabilize and come down from 17.4 at some point under 15%, and right now just under 17% at the moment. So it's been relatively flat, but a little bit of a decline in 2022. And of course, valuation was extremely high at one point for the company, which is also one of the reasons why it was selling off, because it was trading at over 15, 16 times sales, and it's now come down to some really, really low multiples. Now, if you come over to the balance sheet, and if you plot for, let's say, total cash for the company, which is as of the June quarter sitting at over 13.6 billion, and then you come down, plot for, current portion of long-term debt, 2.4 billion, and long-term debt, 9.7 billion. So you combine those two values, and we're sitting at around $14 billion worth of debt, total debt, with cash of 13.6 billion. So slightly more debt than cash on the balance sheet here for the company. Now, coming over to analyst estimates, we do still have a hold rating on the stock with 19 buys, 26 hold ratings, with an average price target of $79, a high target of $126, and a low target of $60, with expected growth here in the 11 to 12% range, which is exactly one of the reasons why PayPal continues to trade at a really, really cheap multiple. On a forward basis, 16.6, and that number is coming down to under 6 times earnings, as earnings expectations are for growth of from 12.7 to as much as 14% for the business over the next 5 to 7 years. So this analysis goes as far as 2031 is what they're expecting for, at well over $12 in earnings per share. Now, if we come over to our analyzer, right? So before we do that, let's just come over to our ratios and come all the way down. So you'll notice that we are trading at well over 16 times earnings multiple, which is over 6% earnings yield on a forward basis. Price to sales has come down to 2.2. At one point, it was trading at over 15, which is actually quite crazy to think about. And then price to free cash flow, we're looking at just a little bit over 11.2. So again, very, very cheap and very low multiples for the business. So let's just do some very quick calculations. By the way, we've added a brand new net liquidation value formula and calculation over here as well for all the companies, all the stocks that you can analyze. But let's just come over to our discounted earnings multiple model. And what we're going to do is we're going to analyze for the next 5 years. And the next 5 years, the expected growth is around 12 to 14%. Let's just plug in 12% for the company. And P multiple of, let's try 16 to start. It has traded well over 25 and 30 times earnings multiple in the past. In fact, 40 times multiple based on the last 5 years average. But of course, since it's been selling off, it's now trading in the 14 to 16 range. Let's start with 16. with 1.65%, let's just do that 2% share buyback for the company. So what that simply means is $4.2 billion of net income growing for the next 5 years of 12% compounded annually. And then finally trading at 16 times earnings multiple, discounted back at 12%. That's the discount rate with a 10% margin of safety and 2% share buyback. If you hit calculate, we're looking at the stock price now $64, which was originally the level that we were talking about as PayPal being fairly valued to somewhat undervalued at around low 60s. So when it was trading at $57, we ran the same exact calculation. We ran the same exact numbers in and around those $60 level. And PayPal was undervalued back then. And right now it's about 9.73% overvalued because it's already rallied over 24% back up to over $71. So if you make some slight adjustments, right? So if you push for a 14% growth rate and slightly higher multiple of 18 times, which is just a small expansion from where it is trading right now. And then if we hit calculate now, you'll notice that the fair value ends up at just under $80 a share, $79.48 to be precise, with a future price target of well over $155 for the company, as you can see over here, with a total return expectations of just over 95%. So this is going to be that sensitivity grid or the matrix, which you can take a look at and figure out, okay, you know, what's the growth rate? What's the P multiple? Where do I feel comfortable? So for example, if you apply a 16 times P multiple and the same 14% growth rate, we arrive at $70 as the fair value. And right now we're trading at 71, so it's not that far off from its fair value. If you arrive at, let's say, 18 times multiple with a slightly slower growth rate of 12%, then 72.75 is going to be that that fair value, with of course the price at 71.64 still making it slightly undervalued. So again, it really depends on where you feel the growth rate and the P multiple should be for PayPal based on your analysis. For me personally, I think the low 60s are going to be somewhat reasonable for PayPal from a intrinsic value standpoint. It's kind of stabilized there for 1 year. That's actually one of the reasons why I believe that PayPal was trading in and around the $50 to $60 range for well over 1 year, because that was considered to be the fair value for PayPal. Now, coming over to discounted cash flow, we can also run the same analysis with a DCF model. Free cash flows of $4.2 billion. We're doing it for 5 years. Let's say the free cash flows grow by, also 12%, then a terminal growth rate of 4%. So after the year 5, they then start growing free cash flows by over 4%. And again, 2% share buyback. If we hit calculate, we get a fair value of $72.30, which is exactly the same as where PayPal is trading right now, almost exactly the same, 1% undervalued right now. And this is a very deep discounting model, right? So free cash flows, discounted cash flows is in itself a very, very deep discounting model. If you go with, let's say, 10% growth for the free cash flows and 3% terminal growth rate, now we're looking at a 14% overvaluation with fair value sitting at $61, which once again aligns very well with the $57, $60 level that we talked about in our previous videos. So all in all, anywhere between $60 to $70, I think one can make a case for PayPal being fairly valued in and around those levels, depending on which model you're using, discounted cash flow or discounted earnings. $60 to $70 made a lot of sense for PayPal in and around those levels, and it's now just about getting started. But technically speaking, it is getting a bit more on the overbought side. So I think it's really important for us to keep in mind that a short-term pullback or some type of a reset in this rally is possible, coming down to about $70 or sub $70, and then potentially making its next leg up higher of 12%, getting up to $76 a share. But all in all, I mean, the business is still growing. The company is still doing pretty well. I mean, if you come over to the last, let's say, 12 quarters worth of total revenue, this right here, gross profit, this right here, operating income and net income, everything that you plot, you'll notice it's been fairly stable for the business. So it is moving in the right direction. Active accounts are growing. Engagement is increasing. Alex Chris has pretty much vowed for profitable growth for the company. So time will tell how well PayPal can turn its business around after the exit of Dan Schulman and under the leadership of Alex Chris. But so far, I mean, things seem to be improving a little bit for PayPal, so that's good to see. And the next target, like I said, is going to be $76, almost $77 a share for PayPal, with the support level staying put at $68 for this company. So let me know your thoughts down in the comment section below. Do you own PayPal stock? If yes, what has your experience been, and what is your expectations with this company moving forward? Let me know in the comment section down below. And as always, make sure that you drop a like, subscribe to the channel, check out our Discord and our Patreon link down below if you want to access the entire MoneyVest platform and do your own fundamental analysis on individual stocks. And as always, happy investing. I'll see you all in the next video.